In this video, we'll share 3 trade ideas for when our markets or our indice markets are signaling to us that they're experiencing greater than usual volatility and when price action can't stay inside of even our conservative volatility box models. We'll cover the Nasdaq, we'll cover gold, and we'll cover some other indice trades as well where volatility was a little bit more contained. Here is a chart of the Nasdaq Futures, which is what we'll focus on, and we have our conservative volatility box plotted on our charts, right? So these are our models that typically account for even the greatest of volatilities on most days. We see in the case of the Nasdaq that it blew right through that in that first hour test. So at 7 a.m. when we're looking to measure what volatility has been like in that previous hour, we clearly breached through our aggressive volatility box, right? If we load that in, just that plummeted straight through. The conservative box tried to hold this action and we still went even through that, right? So this is your first sign that, hey, we are experiencing greater than usual volatility. And we even had our conservative volatility box give us that trending bubble signal that we are likely trending down. And the same signal should have occurred on the aggressive volatility box as well. So this was your first sign that, hey, you may be facing greater than usual volatility. Now, something that's semi-interesting here is that this wasn't a failed attempt at a follow-through, but instead just went straight down, right? So that broke our traditional pattern there. Another interesting observation, and this was talked about in late 2019, because that's when this pattern was a little bit more prevalent, was where we would break through our conservative volatility box and then have a retest of what would be that previous cloud level and before we then started to plummet straight back down. And in this case, the Nasdaq still chopped around a little bit more one more time before giving you that ultimate follow through that this likely trending down bubble we're used to seeing at least with this bubble, right? So that's your first clue. One way that you could have played this move down is to identify when we breach the conservative volatility box. This is before you have any capital at risk, right? We're just looking for information. We get the information that we're trending down, and then you use this information to try and buy options or a more defined risk way, right? Doing this with futures is exceptionally hard because your stop has to be somewhere above your last pivot point in this case, which is really just too high of a stop versus options, which is a little bit more well defined. You can define your risk as the debit paid, and then try and see if you get this follow through move to play on this downward side. And it being a Friday, you also have the luxury of 0 days to expiration options, even on things like the Qs. Now, another way to try and play the fade, and in this case, the fade isn't as exciting because it's a Friday afternoon, right? You're not too sure of what kind of follow through you can get, but that's where for our members who have access to that stock volatility box tool, you can run it for the Qs, right? And this gives you daily levels. And so now if we load in our Qs and we load in the stock volatility box, we can see that the Qs bounced perfectly into our volatility box, and then our entry comes as we get an edge signal arrow after we bounce into our edge zone. So that happened with this red candle right here. Our edge signal plotted in the very next candle, and we're now looking for an entry price at this cloud or better, right? And we had that opportunity when price falls back in, and this is a typical pattern where price falls in, we see the edge reversal signal, then we get a retest before we ultimately start to go up higher. And that's what we had here. We fell down a little deeper into the cloud, so you had an opportunity to add or scale into this position if you liked. And then into the rest of the day, even it being a Friday, we still did see the follow through to our target line. Right, and that's a way that you can use both tools together to really get hourly and daily levels to play some of these more bigger meltdown days. And for those of you that do use options to try and get into that trending down trade, that happened right here, right, using the Qs. Our entry point would have been somewhere there at the retest of the cloud. And you can then start to also use the volatility box clouds to help you figure out where you should start to look at targets, right? With your first target potentially being this trending line. So you're looking for a move from our entry point to the first target. Your second target could be the beginning of the clouds. And then your third target might have been the edge of the clouds, which was not hit. At this point, you're able to manage the trade and start to at least have a break-even stop once you've hit your first target. So that's a different way that you could play some of these trending market days and use both tools together if you have access to them. And if not, that's where you can start to look at other markets where we're facing a little bit less volatility than in the case of the indices, right? Gold, for example, on our aggressive volatility box gave us that sign that it was respecting our volatility box when we had it breach our entry line and then we had price follow through in the opposite direction. right? And so at that point, you're now looking for any breaches of the volatility box and an edge signal, which happened here. And you had multiple edge signal arrow populate here, and then you also had multiple edge arrow signals populate after we hit this edge zone for a bullish reversal. Now, in both of these cases, you did not get the opportunity to enter at that cyan line, right? So that's something to call out. But it's the idea that you've hit an edge zone, and if you're willing to pay a little bit of a premium, then these signals can help you get some of these bigger reversal moves, especially on markets like gold. And when you have clusters, which is another consistent theme that we've been talking about. Another example of a contained market was the Dow Futures, right? And so if you say prefer trading the indices and not gold, then you can also look at the Dow where we had our price fall into our aggressive or our conservative volatility box, excuse me, and then we had a very small follow through, but we did have enough of a follow through of this equal and opposite reaction. So if there was an index market that you were wanting to trade, the Dow was the one that was the least volatile outside of the Nasdaq, the S&P, which was following the Nasdaq, and then the Dow, right? And so now if we take a look to see what happened the rest of the day, and if what we saw in that first 30 minutes ended up holding true to give us actual trade insights and ideas that you could use that very same day, then we can take a look that the next time the Dow fell into our conservative volatility box, we had price fall in, you had an edge signal, you had an opportunity to get back in at what would be that cyan entry line price. You had a few more edge signal arrows populate. So once again, the idea of a cluster before ultimately holding that level and having a rally into the close. Now, of course, this was a Friday, so this trade becomes drastically less appealing from the perspective of actually taking a trade. But these patterns have been coming on all days of the week, not just Fridays. And so calling it out and the idea to be able to see it pan out on a Friday without any capital at risk is really a luxury and part of this whole film room session. It's something that we can go back, study, and use for the future. Right, so hopefully with this video you get an idea of not only how to play some of the trending markets, how to find areas where they may potentially reverse using daily levels, and how if you don't have access to the daily levels, you can narrow down your focus to the markets where you are experiencing volatility that you can contain, and even layer on something like the conservative volatility box on gold when you get signs that the indices aren't even respecting their conservative box, right? So at this point, you're uber conservative and look for any fade opportunities using the conservative box. All right, hope this video helped. Take care, everyone, and we'll see you in the next update.